In the 5 years since the global recession of 2009, economic growth has remained worryingly weak, whilst in many developed economies, inflation has stagnated at uncomfortably low levels. I'm joined on the line with Alistair to discuss the outcome of the ECB Governing Council rate decision and press conference earlier today. Alistair, welcome. It was forecast pre-conference that the 24-member Governing Council were likely to leave interest rates unchanged after reducing rates to record lows last month, with the deposit rate cut to below zero. Traders today waited with bated breath for the details of new stimulus measures. How do you think the confirmation that interest rates will stay the same will be received?
So, last month, Mario Draghi unveiled very, very wide-ranging stimulus measures because inflation was staying far too low for their medium-term outlook. So I think it was very unlikely that they were going to announce anything more this month. I think if they did, then it would have spooked the markets somewhat. So Mario Draghi didn't really disappoint anyone. What everyone was looking for, really, was for further details of the measures that were announced last month. So the TLTROs, the Targeted Funding for Lending Scheme, and also more details about the potential for QE in the asset-backed securities market. We're going to get some more information. Mario Draghi touched on it slightly, but the more information on the TLTROs is going to come this afternoon, and it will be quite technical details about how much banks can borrow. And he also talked about further QE in the asset-backed security market. I think that was the feature most likely to influence the exchange rate the most. And it looks like, from what he was saying, that it's still a while away. There's lots of the fine print and fine details to work out. But it looks like it is coming because it's an important funding channel via the asset-backed security market for banks. And I think he's sort of prepping the markets really for funding when interest rates stay very, very low. So overall, the meeting really was for more details about last month's announcements rather than anything new this month.
How do you foresee the outcome of today's ECB meeting affecting the currency pair EURUSD?
Well, again, if we go back to last month, when he announced all these measures, the euro reacted fairly violently, dropping off around about a cent against the dollar, which is a big move in that market. So what's happened since is that it's retraced most of the move, and he explicitly said that the exchange rate was an issue, and that was one of the things that was dragging down the inflation rate in the Eurozone. So you can almost see what he was announcing last month as a sort of a play on the exchange rate. The problem for him was that the euro has then recovered all of those points that it dropped immediately afterwards. And again today, what he's trying to remain is quite dovish, and the euro has weakened off ever so slightly. But unfortunately, we've had some US data out as well. The non-farm payrolls have just come out, and they were very bullish, and that's really what's driving the US dollar stronger against the euro at the moment, rather than anything Mario Draghi was saying. He also said he was going to keep abreast of exchange rate development. So I think he's really praying that the US economy starts to do a lot better than it's been doing, because that's the thing that's going to bring that exchange rate down, and it's going to help Europe as well at the same time.
Many investors have said they expect further gains for European stock markets later this year, as the ECB's measures help to offset signs of weakness within the Eurozone's economic bloc. Does this reflect your forecast for the future of the European stock market?
Well, everything that Mario Draghi's announced is designed to get the funding channel working better. So that's loans to particularly to SMEs. But generally bank lending to companies to much higher levels. There's still a lot of banks in the Eurozone still contracting lending at the moment. So what we're going to try and do is get, if not all the banks, most of the banks to be net lenders to the economy. And that is obviously very positive for SMEs, and that will feed through to listed businesses, definitely. Unemployment still remains very high, so wages are not going to... Wages shouldn't really be a problem for businesses either, and they can borrow at extremely low rates. And those two things combined should lift profit margins in the ECB as we slowly sort of get economic recovery and confidence returning. So I would think as well, that's a very good forecast, because conditions as they are at the moment are positive for businesses, i.e. there's no wage pressures, they can borrow at very low rates, and the ECB is designing a system to try and get credit flowing to them it really is just the consumer demand that will probably lag all this process. Once that starts picking up again, that's positive for stocks as well.
Thank you for your comments, Alistair. That's all we've time for today, but check back in tomorrow when I'll be speaking to Phil McHugh for his Trading Week review in tomorrow's weekly wrap-up. Goodbye.